So ultimately, Slang is a CPG company in cannabis. We're not huge cultivators. We're not retailers. We live from the extraction of biomass to the distribution of finished packaged goods. It's not because we don't believe retail is a strong business, but it's because we don't want to compete with our customers, and we think that on the cultivation side, it commoditizes relatively quick, and prices come down in all but the highest end of the bud category. And when I talk about being a CPG company, I talk about having real brands with real track record across multiple categories, and this highlights a few of them. We're most dominant in vape. One of our products, the O-Pen, has been around since 2012, the dawn of Colorado legalization, and it remains the #1 vape product typically in that state. But it's also gone to the 10 other states that we're in, along with many other of our products. Historically, we've done over $200 million in sales across the portfolio. We're selling in 10 states, looking forward to expanding that number this year, and we're in 1,500 stores. Just with the THC products. There's more stores carrying our hardware alone. And I think that's an important set of numbers because we've been an MSO before MSO was a thing, and these brands have track records in some cases as far back as 3 decades in the Greenhouse Seed Co. and Strain Hunters case. As I mentioned, the sweet spot for us is manufacturing through distribution. For the reasons of commoditization and not wanting to compete with our customers. The ability to build a brand is really based on the ability to access that brand. And our head of sales likes to say the best ability is availability, and being in that many stores has really helped build these brands. This is the Slang worldwide ecosystem. So Organobrands was a really transformative acquisition that we made, which came with a lot of great brands, but most importantly, a great team who are all long-term with the company. Greenhouse Seed Co. is a famous brand out of the Amsterdam coffee shop world. That is genetics-focused, quality-driven, and whose strains would be recognized by most cannabis consumers from Super Lemon Haze on down. And that's where we'll operate at the premium end of the bud market, as we feel everything else gets squeezed. Canopy Growth is an important partner to us. They have a warrant to acquire a position in Slang when they get comfortable with federal law, and they purchased my last business, Metrum Health, which I was a co-founder of many years ago. It feels like 6 years, which in cannabis terms is dog years. So grizzled veteran in my 30s. AgriFarm is a Canadian licensed producer, and that really is a supply chain asset. We don't tout the fact that we have ownership and partial ownership in a Canadian licensed producer because that was kind of the first wave of the cannabis industry. Do you have a license? How many square feet do you have, et cetera? Now it's about how do we get to market, and that facility is where we're producing all of the products that will hit the Canadian market, especially this fall when regulation opens up. And then Green Lane, if you haven't heard of it, is the largest distributor of hardware packaging in the industry, and we're looking forward to announcing some really exciting strategic collaborations we'll be doing with them. But we have a collaboration agreement with them today to work with our respective brands and distribution networks together. This is our map. This is where we have flags in the ground, and you'll notice it's a lot different than some of the other maps because we're more concentrated in mature markets. We're not really a limited license, vertically integrated play. Not to say those are inherently bad, and we did very well, and that was where our experience was built in Canada when the Canadian market was structured like that. But we're most dominant in Colorado, the most competitive, saturated market in the U.S., but it's also where over $1.5 billion worth of cannabis is sold every year. And then you see we're in many of the recreational and medical markets. So we're moving a lot of biomass through our system. These are a few highlights, but ultimately this is what we care about. Our true north is branded units sold. There's really, there's a lot of noise, there's a lot of different metrics. One of the easiest things to look at is revenue, and our revenues are strong, but that doesn't tell the whole story. We believe this industry goes to a CPG model, and that the regular rules of business and society will apply to cannabis the way it does to every other product category in CPG. So as regulations change and revenue recognition changes state by state, all of that sort of stuff will shake out. But what ultimately will matter is where your brands, who is buying your brands, and at what scale are your brands being sold. So the hardware category, we have great coverage. The OPEN, as I mentioned earlier, is one of the pioneers in the 510 thread category, but there's a lot of people with 510 thread products. Firefly, however, is more of a premium hardware product. They made a name for themselves in the dry herb space. Mark Williams, their founder, left Apple Computers to start that company, and he has a great design mind, which now we can apply across our whole portfolio, and we'll be releasing oil products through that brand this year as well. District Edibles competes incredibly well. In California, it's typically a top 3 on BDS. And Baked is a bit more of a fun, cheeky brand that caters to the more price-conscious consumer, which is the vast majority of the market. I talked a little bit about the legacy and the strength of Greenhouse and Strain Hunters, and that's where we'll live in the premium bud side initially. And in beverages, we have a product called Magic Buzz. It's kind of a 5-hour energy form factor. And it performs well in its category, but it's in a very small category. So what's important for us is following the data and going where it tells us. Vape is such a large category, second to bud, and we've got great coverage there. Beverage is about 1% of the market. It gets a lot of attention because of beverage companies doing deals with cannabis companies, which ultimately I think is really more to get exposure to cannabis and enhance sort of the mood-altering business and the lifestyle businesses that they have, not to try to just sell more liquid. But nonetheless, we're there, and we let the data decide where resources go and where attention goes. These are a few milestones that are a few months dated at this point, but the cumulative retail sales number just continues to increase. The numbers on here in terms of positioning are from a BDS analytics poll a few months ago. So we like to look at a third-party arm's length leaderboard like BDS to really point to performance. Again, I mentioned revenues being different state to state, and ultimately in the most extreme example of our revenues versus certain other groups' revenues, if you're a retailer in a certain territory and everything on your shelf comes from us and everything that we sell in that territory is on your shelf, then your revenues will be roughly twice ours, or whatever your markup ultimately is. But that won't tell the whole picture. Because if we look at maturity and where this ultimately goes in our view, which is to CPG, you can look at a Coca-Cola, for example, which will be valued at 6+ times its revenue versus a 7-Eleven, which would be 0.7 roughly. Not bad businesses, different risk profiles, different reasons to own each one, and that's not to disparage people with different strategies, but that's why we're so laser focused on branded unit sales. And the number that's not on here that I really like to talk about is 2 billion servings, which is how many servings we've sold. And a serving size, again, back to apples, is a little tough to choose. We've chosen 10 milligrams of cannabinoids because that's what the typical regulator will say is one adult dose. And that's another apples to apples example. Because in Canada, where I'm from, the regs only allow highly diluted oil. So if a licensed producer said, I sold 2,000 kilos of cannabis oil, I would say you sold 1,800 kilos of coconut oil and 200 kilos of cannabis oil, you know? Whereas if we had said we sold 2,000 kilos of cannabis oil, that would be 85% concentrated. So we take everything we've sold and divide it into those 10 milligram doses. And to that end, I believe we've sold more doses of cannabis products than anybody with our brand on it, not including some of the famous black market characters throughout history. This is how we achieve it. It's pulled straight out of the CPG playbook. you can see the slide, but one of the things that I think is a competitive advantage for us is our sales organization is built in the image of mature sales organizations. The head of our sales team comes from Konica Minolta, where he sold the most boring product in the world, the commercial photocopier, but they had some of the best sales systems and strategies which we employ. We use pods of 3, sort of a tactical, a relationship, and a brand ambassador type person who cover 50 accounts each. Our ground game is unmatched, and it's a lot easier to scale these pods of 3 people than it would be to scale up retail stores if that was the model through which we were building our brand. So it's highly scalable. We have great social media penetration, and we do things that are allowed in each market to push the envelope. One thing that also is not in this presentation, but we're really proud of, is a campaign we got to run in California when legalization took off, where we sponsored the bin in the airport security line, and in big letters it said cannabis is legal, and small letters it said traveling with it isn't, leave it in California, and then it had all of our brands, which was awesome, and it would have cost us probably $100,000, I think, to run this 6-month campaign. But luckily, while the local TSA office approved it, Homeland Security was livid and said, you can't be advertising cannabis products at the security bin at the airport, get this out of here. So the campaign ran a week, but the news all picked it up. It was awesome, and we only had to pay a few $1,000s for the week that we were live. So we've been really lucky in doing some of these guerrilla things that have been really effective to get the brands out there. Again, I know a lot of you guys understand the global makeup of the industry. Like the last speaker, we do believe that the US, being the largest and most important consumer market in the world, is the most important market for us. But that's not to say that through our relationships and through our partnerships, we can't get these products around the world. And while we're paying attention to each market, ultimately what matters to us is that we're in markets where an adult can go to a store, consume cannabis, and ideally they're consuming cannabis with our name on it. This speaks to market penetration. We find that, again, through our model of our pods and our sales team and our ground game, we've achieved some great penetration. But being in multiple states with multiple products across multiple categories also allows us to test things out that inform our investment decisions. So Colorado, we are very dominant in the vape category, but we also have a ton of relationships that allow us to test things out. And we can say, is this new product going to work? Let's try it out in a few markets before we push it 10 states wide and invest in all that infrastructure, because, as you know, it's a siloed supply chain in each state. So we try a product out, usually in our backyard in Colorado, take it to another newer market to see how it's resonating, and we use this system to grow rapidly, more capital light than some of our peers. Now, we hear a lot of good news, and everyone knows the good news, and we all believe in this industry, which is why we're here and we're all investing. But I think it's important to draw attention to some of the bumps in the road and some of the issues that people face. It's not what a lot of people in the early days of the industry thought, which was rent a warehouse, throw up some lights, wait 8 weeks, and get rich. It hasn't worked like that. One of the biggest myths about cannabis is it's a great way to make money. And these are some of the reasons why. The fragmented value chain, I spoke a little bit about the state and federal situation, which requires you to have independent supply chains, which makes it really hard to be consistent. So in our categories, it's much easier than in the bud category, but you still need tight SOPs, tight operators, similar equipment to make sure that, whether you're in Portland, Oregon, Portland, Maine, Portland, Jamaica, you can buy an O-Pen or one of our products and it's exactly the same. And that's how you build trust and how you build a brand in a lot of ways. Consumer preferences are constantly shifting. So if we were stuck to just one category, like beverage, and we were really pushing to make that happen, it could be a bit of a waiting game. But we have cross-category coverage. We let the data guide our decisions, and we're really hopeful that beverage grows to be the category we think it can, but we don't need it to tomorrow, because vape is a massive category in every market. It becomes legal and edibles as well. and price compression in maturing markets. Our business model is pretty anti-fragile to the commodity swings. We're buying at the spot price to the extent there is one raw material in each market. We're extracting it, manufacturing a finished good, putting our name on it, and then someone else is buying it and marking it up. So we're least likely to get squeezed where we sit in the supply chain. And finally, regulation and tax. I mentioned a little bit about the state-federal situation. Most people are aware of 280E, which is really burdensome for retail and sort of vertical guys that can't move economics around as easily. But where we are in manufacturing, it's pretty much all COGS that can be deducted from the top line, and the branded packaging exists in a totally other different entity that's not 280E exposed. So we sit in a very attractive part of the supply chain for regulatory reasons as well. Here are a few highlights. As I mentioned, we're going to be probably numbers light in the Q&A just because of where we're at with the regulator right now. But this is a slide from our roadshow for this financing, and all I really want to point to is that historically we have had significant revenues and we have a real business, so we're not making the same leaps of faith that a brand new company might be making, where this year we did $1 million, but next year we'll do $1 trillion. We can kind of point to a track record of many years where you can see that growth and track it with a little bit more certainty. But I really liked what Hadley Ford said in his presentation this morning about revenues are going to be really important, and what are our 2019 revenues going to be? I don't know. And he said, depends when our stores get open, depends on regulation, and so we certainly can't give guidance today, but we'll look forward to sharing more about that in the coming weeks. So I just want to finish with our overall view on the world as Slang Worldwide, which is this market moves to CPG. We're a CPG company. All we really care about is branded unit sales. Other metrics are important. We compete well across them. But as this market evolves, we believe that our strategy is going to be the dominant one. And I already feel the flattery coming from the imitation I'm seeing in a lot of decks that have been circulating, showing that people don't cultivate and they don't retail and they're doing this thing in the middle. And we won't be the only ones doing it. We think we will do it incredibly well. We've done it well historically. We've got some great brands, and we look forward to just using the capital markets to accelerate an already successful formula. Q&A, jump in, Alan.
So the global markets, you're worldwide. Can you talk about
worldwide?
What you think the best markets out there are?
Best is tricky, because for us, the best market would be a market where some adult off the street could go into a store without too much rigmarole and leave with a cannabis product. So that either means a medical market with reciprocity with other medical markets, so you don't have to go to a doctor, or in the worst case, a doctor every month to renew a script. So that's pretty limited globally. We're all kind of seeing similar data, and it's encouraging to see how well Germany's doing as a medical market. There's insurance reimbursement that's helping that a lot, but that's an interesting case study for what could happen. And as companies go wreck in Europe, or as countries go wreck in Europe, I think you're just going to be able to extrapolate from consumer activity in legal markets to what's going to happen in other markets. Because cannabis consumption is one of the very sort of consistent things across socioeconomic and political strata. Whether you're on the left or on the right, rich or poor, people are consuming cannabis. They'll consume different products and they'll buy different brands that resonate with them, but cannabis consumption is something it seems like we can all agree on. And I think that the behaviors that we're seeing in Colorado are consistent with the buying patterns we're seeing in California and other places as they mature. So I think you can kind of look at per capita numbers and apply them to Europe, and we'll see.
As a follow-up, would you have to go set up facilities in all these different countries, or will we be licensing?
I think that one of the great things about our relationship with AgriFarm and Canopy is that from a supply chain standpoint, we have as strong an ability as anybody else to take our CPG products from America or elsewhere and get them into those markets. We already have the test case in Canada where Canopy said, these are really exciting brands. We want them in our distribution network. We'll provide you with a facility through which you can manufacture and get those to market. And we're really excited to see that roll out this fall when Canada allows the products that we sell. But I don't think our plan would be to build infrastructure everywhere, because Uber doesn't own a lot of cars, Airbnb doesn't own a lot of real estate, but on more of an agricultural side, Driscoll's doesn't own a lot of strawberry patches. So we want to leverage assets, infrastructure, and expertise of other people that do those things really well. The family farmer is going to do their patch a lot better than the giant ag company. The giant ag company will sell them genetics and fertilizer and buy it all in bulk, but they're not going to do all the farming. And in retail, that's not our expertise. Yep.
Do you license brands, or do you just own them? Anything about that?
We're exploring different strategies where there's a quid pro quo that makes sense for us. So as I was mentioning, retailers are really important to us, and we want to have good relationships with our retailers. And in a mature market like Colorado, we're on the shelves of two of the biggest chains, which compete against one another. So I think to the extent we'd co-pack or distribute another brand, it would be because perhaps a store is a house brand that they want to put on the shelf, that we might help them do that. But something where there's a win-win for everybody, because it's just so early in the space and everyone has a brand and everyone wants to be the brand leader, there would be not a lot of, it wouldn't make sense for us to use our capacity, our bandwidth as management, or our capacity and infrastructure to enable too many brands we don't own to thrive.
You said you were getting listed. Where? Any details?
Yeah, we're going to be listed on the CSE, which is kind of the de facto place to list as a multi-state operator in Canada. And
Who's doing it?
well, we're doing a direct listing. So we went through a full prospectus process. It wasn't an RTO. There's just a few of us in the industry that have done that. It gave a lot of confidence to people writing checks when we were raising the money that kind of transparency would exist, but it also allows us to raise money without hold paper right after we list, because we have all the disclosures there. CSE, the final prospectus will be filed imminently, and then within 10 days we'll be trading. And that's it for time. Thank you, guys. Appreciate it.